Hello everybody, this is TJ with the Counterpunch Trader. There were some really great trades to finish the week with the Dow eMini, actually with a lot of markets. On this video I wanted to focus on the last two sessions of the Dow eMini because they were just such a contrast from Thursday to Friday, and the trading was so great and the way the strategy is designed handled both sessions so well. So let me walk you through the details. First, let's just take a look at the end of Friday, because it was actually pretty interesting how the strategy worked. Even though it wasn't a time when we were trading, we certainly could have been, and I could see why traders might want to trade the end of the session. The strategy certainly works. The point that we keep making, that if you can just treat your trading like a business and stick to your trade plan, things always work out, especially if you've taken the time to build the plan and to build a foundation for yourself. And when I talk about foundation, there's just really a few key elements that I'm referring to. One, of course, is a mastery of your strategy. Second is a big picture perspective where you could actually see what your trade plan has produced over recent history, so that you can have a sense of belief. You could understand what it's most likely to do going forward. Of course, with trading, nothing is absolute, and we all work and trade within that reality. Some of us maybe haven't accepted that yet, or haven't learned to accept that yet, and are still seeking perfection, 100% winning trades, trying to fix losing trades, even though it's already too late because they've already lost. Every time you make a change to your trade plan to try to fix a trade that was a losing trade, you end up creating new problems, because nothing's going to work 100% anyway. So if you could just lean on your system, of course you have to get to that point where you believe in it enough so that you can lean on it. To me, that's the key. So I'm going to show you some trades that have basically been a part of a trade plan that have been running now for well over a year. Haven't really changed anything. They continue to work. They continue to hit new equity highs on a steady basis. And interestingly enough, I'm just looking at this end of yesterday. Friday ended with a really strong rally, and there's some great trades on here. You could see I'm typically not trading this late in the day, but when your strategy is robust, it's nice to be able to see that it could pick up all the major moves. Of course, with the Dow eMini, we use a technique with Counterpunch called trend mode, and so we filter out some trades. This reversal trade here, you can see it reverses, and because you can see the calculator is printing the trade in gray, that's because it's filtered out. Okay, it's not with the trend. We can only take long trades when our trend indicator is up, blue. But then there's another setup that comes right away, right afterwards, and that one is with the trend. The line went from red to blue, and you could see how well it worked. Looked like it was going to stop out, but the stop held by one tick, comes down. Stop is right there at those exhaustion dots. Shows us levels where the market gets tired. We trade off of those levels. And there's other setups that work as well. Of course, this one, the stop is way down here. I was referring to this additional setup, and there's even another setup. But the calculator is tracking this first one, and you can see how it comes up. It's a nice target 1, nice target 2. Doesn't quite get to target 3. It comes down and stops out with the trailer. But there's another trade right here, and that comes up, hits a couple targets. Lots of good trades, lots of opportunities. Of course, the Counterpunch is going to show you all these strategic places to take setups and take trades, and there's more than one in here. And then, interestingly, how at the end of the session, the shorts actually, even though some of them were filtered out, you could see how they would have made some nice, good trades too, with some real accurate targets up until the very end, where it comes down and just almost hits a target 2 to end the session. Of course, not really trading in here, was already finished for the day, but it's nice to see how the strategy can work. Let me go back to the beginning of our Thursday morning session, because that's a session that stands out in my mind. I still remember it. I'll show you why in a moment. Here we are on Thursday morning, 2 days ago. This was a really fast one and done session. We start right at 8:30. Remember, we're in trend mode. Let me just make this a little bigger. You know, you don't have to show all these lines. We don't have to show these moving averages. We definitely want to show our signal line. The calculator that's printing these trades on the chart already has this stuff baked into its code, along with the filtering that we use. But I like to display it just to get a visual, and you learn how to look at it and see the different repetitive patterns, especially the way the yellow line and the magenta line, that's merely a 50 EMA and a 200 EMA, and we use those just to kind of show us what's happening. Usually when the market's going to turn, you can see that the 50 EMA bends up and tries to come up and meet that 200 EMA, and we just like to watch how the price behaves. And so when it crosses over, there's a good chance you could be in the midst of a good rally. So catching it when it turns is always a nice thing to be able to do, and sometimes we're able to catch it early. This one we didn't catch until it was a little bit further along, and of course we're waiting for our start time at 8:30. So here's a setup right here at 8:17. It's not quite 8:30, but we could still take this trade at 8:30 if certain conditions are met, and in this case they were. Right here it's 8:30 and the price is below our entry. It has not hit the stop. It has not gone far enough to hit the first target. So if it comes back up, we can grab that trade. We call that getting in sync. It's all discussed in great detail with the training, the CPT, Counterpunch Trader training. And it's what we do in the trade room. So look what happens. It does come up. It actually came up on the next bar. Actually, that missed by 1 point. So this is the bar it got into the trade. So when you see this right here and you're at your start time, you can go ahead and place your order. You click on the bar. You got the entire trade. You put in a bracket order, whether you're using the active trader of Thinkorswim, which is what I like to do. You trade with the Matrix, NinjaTrader Dome. It all works the same. You put in your entry. You have a template. Depending on how many positions you're trading, just a single position, you could just trade to target 2. And then, of course, you put in your stop. So when the entry gets triggered in, then it activates your target and your stop. And then those are attached to each other. So when one gets hit, the other one cancels and vice versa. Now you can trade with multiple positions. You can go to a target 3. You can trail the signal line. And you could look down here at your risk-reward information to see exactly what size of a position you should put on based on our sensible risk parameters. Typically 2% of our account on any given trade is how we like to think of it as a general guideline. So 38 points of risk. You can see target 2 is a nice target, definitely better than a 1-to-1, 1.2 to 1 risk-reward ratio. That's pretty good, especially with the kind of winning percentages and the stability of these setups that typically work out for the most part. Target 3 is even better, of course, and you can certainly trail. So if you go with 2 positions, you can usually increase your risk-reward ratios. Anyway, so that one triggers in, and it quickly goes up to target 1, and you can see how the stop moves from here up to here. The calculator is pretty smart. It's going to lock in a tick or a point to take the risk off the trade, but it's also going to trail the signal line, and it trails on up. So whichever one is going to give you more profit. So at the very least, you have a risk-free trade, but if the signal line is tracking the price as it was in this case, notice that it's showing you all these great support levels. We're going to be tracking and trailing that line as well to guarantee a winner. You could always add to your position here. That's a more advanced approach and takes a little more homework and research to really determine the best times to do that. But look what happens with this trade plan. We just focus on the primary trade that we're in. It could be one of these darker trades sometimes, depending on what's happening at the start time. In this case, it was the light green trade, the bright green trade, I should say, and it stabs right up, and look at how it hits that target perfectly. 17,238. It comes up and it hits 17,238. Now, if you've been following along with the Counterpunch storyline for the last year, this wouldn't surprise you because you would see this a lot. These targets are just uncanny how accurate they can be. We always protect ourselves because, again, with trading, nothing's perfect. Sometimes it'll just barely miss. Sometimes it'll just stab through a little bit, which is usually better for us because it guarantees we'll get filled at our price. In this case, if it just barely touches and backs off, you have to check your fills and make sure you got out, because there may have been, you might have been the last person trying to sell at that price without a buyer on the other side, and then it comes off. The trade did what it was supposed to do, but you're still in the trade. You have to have a plan on how you handle that. What do you do? Some people might wait 2 or 3 seconds and then mark it out. Other people just might put a stop down at target 1 and see if it could pop through again. Sometimes if it just misses by a tick or two, you also could maybe just mark it out. You don't want to fight over the last tick or two, because look at all the nice profit you made. So ultimately you've got, between this stop and the target you're trying to hit, well, that's how much you're risking at this point, right? It's all market's money. It's all profit that you've earned, but it's your money really. So do you want it to come all the way back down and stop out, or do you want to take fast action and get the lion's share of that trade? So these are all questions you need to ask and have answered, and be a part of your everyday trade planning so that you know what to do when it happens. You're not caught like a deer in the headlights trying to figure it out in live time. This is when I talk about trade planning. These are some of the finer points to trading. And with experience, you learn. You might do it differently a few months down the road after you've traded for a while. That's pretty normal. All right, so anyway, look what happens. That was it. That was all she wrote. So far, the stop holding, and then it comes down right there. And that's it. That's the end of the trade. And our trade plan says if you could hit a target 2 winner and you have a positive result, then that's it. You've achieved the goal of the trade plan. So we would call this session a one and done session. And again, that was good for 46 points at $5 a point, plus the trailer, whatever that picked up. You know, a little bit less, actually quite a bit less if you're trading a second position. But a perfect trade. And that was Thursday. Now, Dr. Jekyl and Mr. Hyde is often how markets behave from day to day. So let's take a look at Friday, which was another amazing session, but completely different. Let me show you why. All right, so yesterday's action, really great pre-market trades. There was a lot of action. You could see some great trades in the pre-market. Not a time when we're typically trading. Can you trade during this time? I don't see why not. You're not going to have the volume. You might have slippage, but sometimes the markets are really active. So we'll just stick to our trade plan. We're looking for 8:30. So here we are. It's 8:10. Coming down into Friday's session, 8:33, and you have a possible short trade. Okay, so we place that order, but then because of the rules of the strategy, we ultimately cancel that order, and you can see the calculator knew because it stopped printing the trade. You have a long trade here, but it's against your trend filter, so you're not going to take that unless conditions change. And then that ultimately cancels, and then now you have a possible short trade. The reason why they are different colors is because they're just different types of setups, but they all behave the same way. You trade them the same. You got your entire trade. You put in your bracket order, and that one ultimately cancels as well. So you could see that you have a false breakout up, a false breakout down, and these could result in some pretty treacherous price actions. I often refer to them as expanding range or a funnel pattern. There's all different ways of saying it, the megaphone, but basically, you know, you're trying to catch a long trade, it breaks out of resistance and then falters and heads down and tests support and breaks out of support, and then ultimately comes back up into the center again. And a lot of times this ascending line will keep going and the price will come up, and then it will come back down to the descending line, and these could be very treacherous patterns. You learn with experience to maybe see them coming and be warned, but they could also produce some really good trades ultimately. But notice how counterpunch, all the trades are outside of where the price ends up going. All these entries never get triggered in, and you're just safely flat and waiting because of the rules of the strategy. It's a very well thought out strategy and trade plan. Ultimately, you get the white trade. The white trade is a signature counterpunch trade. It's called the counterpunch trade, and it's typically playing off of greater or larger exhaustion areas. So it identifies these sets of dots right here as a greater exhaustion, a stronger exhaustion zone. Okay, so when it gives you that trade, notice that the trend line is also turned up. So you're in chop mode also, and this is a free indicator we've given away, and sometimes you can't take trades, and if that's the case, it would show up in gray. In fact, the actual setup is this setup here, and notice it's in gray. But because of the rules and because you're in the chop zone and because of the red line being down, it's grayed out. But the condition changes a little bit, the line turns blue, and the trade reappears. But this is just a reprinting of the gray trade because the calculator has determined we can get in sync with the earlier setup because the market conditions have since changed, and it does trigger in. And so the stop's down here, targets are up here. There's your entire trade, 23 points of risk. You still have an adequate risk-reward ratio to target 2 and target 3. Let's just see how this trade plays out. So instantly it triggers in, it comes down, and comes down even lower. And you have the risk of a possible stop and reversal and breaking through and making new lows. Remember that we've had some expanding range, and the market, as you can see, this is as choppy as it gets, right? It's just up and down and long wicks on every bar. Not the kind of session that you probably want to get mixed up in, but when you have a great strategy and a great trade plan and you have confidence in it, and we can't predict, we don't know what's going to happen next. Notice that the price decides to move on up, and the exhaustion level is holding. You even had a retest, which gives you that green trade. Comes up and it hits your target 1 on the white trade. That's the one we're in. And the stop moves up and literally takes the risk off the trade. So now you're in a risk-free trade. You could take some profit off at target 1 as well. That's certainly an option, depending on the trade plan that you're using. Comes up again, pops up again. Look how close it's getting to its target. Very close, not there yet, until there. And it stabs right on through. It's a beautiful target. Now, of course, multiple position traders. The stop is now beginning to trail the signal line. Got target 3 up ahead. It comes down, finds support at the signal line. How often do we see that? All the time. Stabs up, getting close to that target 1 on that supplemental trade, and it actually hits it. Look at that. And it hits our target 3, and the trailer keeps going up. Now look at the pattern that we came out of. Avoiding, when you're living through this kind of price action, it's pretty erratic, it could give you ulcers. This is why traders have to have a strong constitution, a very strong digestive system. You can see that that's enough to give any trader nightmares. But the strategy is just, it works so well, and the principles are so sound that even if it was a losing trade, that happens. Obviously we have some losing sessions, losing trades, but most of the time it wins, and it often will produce winners rather quickly even after the losers. So this is a great trade, whether you're going to just target 2, target 3, trailing, and you know what, it's another one and done session.